Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update, and this is for Thursday, the 6th of September, 2018, just after 3:15 p.m. Central Daylight Time. Well, they tried to get the gold going, and I really wanted it over 1490 to make through a new high and negate the current minor bear signal that's been in place, and I'll show that to you in a minute. What's bothersome in the market is that the gold continues to gain on the silver. It's almost day after day. It's been relentless. You got a small bounce in the copper market. I would view that more technical than anything else. Platinum up a little bit. Tonight, you have to be a little cautious because anytime after midnight, if the president wants to levy up to $200 billion in tariffs on China, he can do so, and I would think that would not be, when he does it, that friendly for those markets. I've heard nothing on the Canadian talk either at this point as to how those parts are going. The energy market's all set back a little bit today as the market viewed the API and EIA reports as not overly friendly. The dollar down did help a little bit to the gold market. When we take a look at gold on a weekly chart, you can see the market still under the key 18-week moving average of closes. It is developing sideways action at this break low area of 1161.40. Now, as I've said, and I'll keep saying it, what I don't want to see taken out on the chart, if it's going to develop a bull play, is taking out 1189.40, this break low that I keep pointing to. Barring that, the sideways action is good. Now, if it breaks out to the downside, you got to be careful. And what do I mean by that? Right here. You've got a pattern of lower highs, lower lows. The reason I said 1214.90 earlier on is if you take that out, you break the pattern of lower highs and lower lows. It could not, under the current setup, set up a buy signal. It stays in a bear signal as long as that's not taken out. What's kept the bear signal from gaining traction is the markets refusing to get away from the 18-day average of closes, especially by closing underneath that number. Notice how the Bollinger Bands are narrowing in and starting to flatten out. That's another sign that the market is developing the sideways action. There's also some seasonal tendency at this time of the year for gold to try to rally. In terms of momentum, what the market has constructively used, and by the way, I'm neither bullish nor bearish because there's nothing on that chart, is it has constructively gotten away from being overbought, and now with both numbers back underneath 70, you're not in overbought territory. Who has the upper hand here? No one. Even though you've got the swing line down, it's countered by the 18-day average number and prices over that, and momentum slightly working down but not pointing sharply lower. When we come over to GLD today, and this threw a kicker into the market too, you went up to 114.26, which took out the previous high of 114.06. So we end up with a lower low and a higher high. No trend. Support back at the 113.07 level, and momentum flat as can be. No edge in this market at all. When we come to the gold miners, they were down, not materially, but they're down. The market had one rally, tried to get to the 18-day average, ran into resistance against it, and then has sunk back from 119.49 down to I said 114, from 19.49 to 17.85. The market is now what? Both numbers that make up the slow stochastic oscillator of momentum are under 20. They were both under 20 yesterday, not the day before. If they both get under 20 again tomorrow, that would change the market from being oversold to what? Embedded. This market likes being embedded. It's been embedded recently. It normally doesn't. Most markets don't embed that often. This one seems to get in there, so something I'm keeping my eye on. Could this market suddenly throw out a buy signal of any type? The word is suddenly. No. I don't care if it went up here. All you'd have is a lower low and a higher high, so I don't see anything there. The gold-silver ratio is a big negative against gold. This ratio is normally going the other way when the metals as a group are bottoming. I'm not seeing that at all. So as the gold's gaining, it's gaining rather marginally and nicely on the silver. You can see how this market's hugging its lower Bollinger Band. And if we go back to gold futures, they're staying over the 18-day average. So that gives you an idea of the difference of the two. The market is not in a trend. You have a higher high and lower low. It certainly has downside bias. That's been very evident. And here's a market that hasn't been able to get up to an upper Bollinger Band since the summer. In fact, you have to go back to June to find out when that was. And it is just laying here oversold, a market that's got problems. In the copper market, you have a pattern of a higher high and then a lower low. So this rally we're getting, I'm calling something of a relief rally. The market is in what territory? Oversold territory as long as one of the numbers stays under 30. In addition, resistance is back up at the 268.20 level. When I come to the platinum, I call the line in the sand the 18-day average of closes. And the market from that number tries to figure out what to do. And when I look at that number, just so you can see it, this current rally went right to it and it sort of stalled out there. You still have a pattern of lower highs, lower lows, and momentum flat. Now, if you were to take out 803.30, that would negate the bear pattern, but it wouldn't start a bull pattern because you'd still have a pattern then of a lower low and a higher high. Difficult one. The strongest, and I know I'm a broken record, I've said it every day this week, has been the palladium. It's got a clear pattern of higher lows, higher highs, and it's got that all-important embedded slow stochastic reading. Last, the dollar index. The dollar index, as it goes higher, often works against metal prices. It has broken down the past 2 days, not materially so, but it has broken down. It has gotten itself now away from a condition of being also oversold. As long as both numbers are over 30, it's not oversold. If the market drops much more, it gets oversold. Should the market take out 95.68, you would continue with the pattern of higher lows, higher highs. In fact, I'll give you a trick on this one. Just close over 95.36 and you reinstate the bull move. That's only 40 points away. I don't know that that's going to happen or not. I want to talk to you for a moment about my research because next Wednesday, the 12th of September, at 12:30 p.m., I'm going to hold a live webinar. It's first come, first served. There's no charge for it. You bring in the questions you've got. If you have stock symbols, it's chart to me is a chart, so we'll try to discuss whatever we can, where the markets are, where we see them going, and I'm going to be trying to pick up on these in the remainder of the year right towards Christmas. So this is what I call the season, and I like to get going. You'll need actually a password, not a user ID to get in. How you do this, I'm going to send out emails later today. Look in your inbox and register. It's the first come, first serve into this thing, as I said. Once you get yourself registered, show up because even though you've got your password, you get in there, it's not reserved seating. So it's first come, first serve, and I mean what I'm saying. And I have a fixed amount of seats in this. It uses GoToWebinar, so it's easy to work with. I talk, you write questions, because if I had everybody speaking, we wouldn't get one word said on these. It's one thing to use that when you got a one-on-one, and we do it in our help desks, but not this way. How you get into it, give us a call. Go to our website. You can always sign up for my research. Get on our mailing list because it's going out now. You can click up here. With that, I'm Ira Epstein. You have yourself a great day, and I'll talk to you tomorrow.